All right, gang, I think we're live. So good morning. Happy Monday, everybody. Welcome to the pre-market show. All right, thanks as always for being here. I can see your chats. That's awesome. All right, so we're going to dive right into the charts. I'm going to walk you through what I typically do on a Monday. Well, usually it's going to be on a Sunday during football. So hope you guys enjoyed your weekend, and it should be an interesting week. So a couple things before we get started. Speaking of being an interesting week, let me bring up the calendar. Really important. All right, so now we're talking about Forex Factory. There we go. So this is forexfactory.com. This is a website that I will frequent, as well as tradingeconomics.com. What's the point here? Don't get blindsided by events that are sitting right on the calendar, right? So we do have OPEC meetings. For those of you that are trading crude, I would not say right now crude oil stocks are all that sensitive to what's happening with OPEC. We'll take a look at the XLE before in fact, you know what? Let's do that right now, because I might just move right on to the next topic. So if we have OPEC meetings, of course, crude's going to be in play, so we can talk about that. But I'll also bring up the XLE ETF. And so what we want to make sure as this populates is that we've got the right weighting at the moment. These weightings don't shift significantly. In fact, you're going to notice that most of the time when you're talking about the XLE, it's really a lot of the energy stocks, the ETFs that track them, have 2, 3 stocks that are most of the weighting. In this case, it's Exxon. Exxon and Chevron will oftentimes go back and forth as the number 1 and 2. So Exxon, Chevron, and ConocoPhillips, followed by Williams, followed by Kinder Morgan. So you'll see sometimes they'll just shuffle up a bit. Kinder Morgan, followed by Phillips 66. Schlumberger, which, by the way, is a heavily weighted stock within the OIH ETF, your energy services. So now it brings us up to EOG. So there's a little bit of overlap here and there. And that takes us over to Marathon Petroleum. So I'll just end up, taking a look at this. It's shuffled up. That's it. The rest of it's the same. Give it a quick save. And this is once a week. You'll have to do this. So the idea here is what? Well, clearly we know crude is going to be in play a little bit with OPEC. Now, what do you think OPEC's having to deal with right now? Do I day trade crude, by the way? Yeah, I'm totally cool with day trading crude. And then if I've got a narrative in crude that's tracking with the stocks, the oil services, oil explorers, the XLE energy ETF, if I have that happening at the same time, then there might be, if there's a good correlation, they're syncing together, which is not always the case. If that's what we have, then maybe I'll play crude. But what's happening with crude right now is, number one, it's moving sideways after an uptrend. So my bias is still going to be bullish. But we know that there's a huge oil field in Libya, Sharara. I could be wrong about the name of it, but there's a huge oil field that's going to come online. And OPEC Plus, which is basically Russia and the Saudis, they want to keep these production cuts in place because that's why crude is sitting where it's sitting. If more supply hits the market, well, we know what happens to the price of the commodity. Didn't we learn supply and demand in middle school? That's really what we're dealing with right now. So ultimately what we have is a play in crude where I'm looking for a continuation back to the upside. A lot of folks who think crude moves with equities markets, not really, not with a high degree of correlation. And maybe we can talk about correlations at some point in the future because, gosh, people make way too much of correlations, even when A, they don't stay steady, and B, sometimes the percentage of the correlation can be very, very minimal, leaving it really not that effective to analysis. So, when I look at the calendar, I want you to see the process. I see this here, OPEC. I'm going to go take a look at what's going on in crude. I see Fed Chairman Powell, 8 a.m. already. in the rearview mirror, but what do we want to know? What type of response, if anything, do we have to Powell? We have a lot of Fed speak today. I haven't had any coffee yet, clearly. So did the market respond? One of the things that we've talked about in previous episodes of our pre-market show is please do not short in front of Powell. So if let's say I'm trading on a Sunday evening and I want to trade the open. I'm a day trader for a part of my life, and I want to see what's going on in the pre-market. So let's do this. All right. So I want to take a look at the price action going back to 17th, the open, or sorry, the 18th, right? Today's the 19th. So the way the market opened on Sunday, take a look at that price action we saw, and there it is. All right. So in this area, going through here, we have the sell-off. Here's the price action on the S&P. Here's the price action on the Sunday open. What do I know about the Sunday open? Pretty much 90 minutes before the bell rings, pretty much the entire market knows Powell's going to be speaking first thing in the morning, New York time. So that means, generally speaking, I don't want to be short in front of Powell. I have no problem shorting after Powell. I have no problem looking for those opportunities. But as a general rule, please don't short in front of Jerome Powell. So you can see what's happened with Powell on the schedule at 8. And by the way, you might say, well, Rog, how would I know this? Look at this. You can look at next week's schedule right now. You can pull up next week's schedule and see as much as we have known right now. Most of these events are planned well in advance. So Friday, Thursday, Sunday, you can look at what's coming up this week. So Powell should certainly not be a surprise. And for the most part, I was bullish through the overnight and into this morning. And again, I'm usually trading with two very distinct differences if I'm trading 8 p.m. or 9 p.m. versus 9 a.m. Eastern. And I'm going to show you right now what that is, because this is something that hurts a lot of traders who want to trade the other financial centers, but really are not prepared for what that truly means. Well, so here's the S&P on a 24-hour basis. If I'm trading 8 p.m., look at my typical price movement range expectation, as opposed to boom, 8 a.m., 9 a.m. It's darn near double. So if I'm trying to trade with lower risk, the Asian session is pretty darn good. If I'm trying to trade and understand price movement expectations, how far away should my stop be, and how far away should my profit target be? Keep the typical price movement ranges in mind, because they're going to be what determine, okay, if I get a 8 to 10 to 12 point hour in the Asian session, that's pretty normal. If I'm pushing 14, 15 points, that's on the upper end of price movement range. So keep that in mind. So know the measuring stick for the time of day that you're trading, right? All right. Good morning, everybody. Great to see you guys. All right. Everybody with me so far? Calendar, crude oil. Calendar, Jerome Powell, right? So you see how the calendar in many ways is not only giving me a heads up for potential volatility events, but it's also giving me a heads up as to what I may want to trade, and even potentially the direction in the case of Powell that I want to be trading it in. Okay, so with that being said, okay, back to our calendar. Scroll down a little bit more. And my gosh, is there an FOMC member or central bank member who doesn't want to be speaking today? We have Monetary Policy Committee. That's your Bank of England. So they're quite busy right now. And they've got plenty. Look, I don't know the Bank of England has been less relevant since Brexit. Nobody really cares what they have to say, because until Brexit is done, they know what monetary policy has to be. ECB President Lagarde spoke about 25 minutes ago. 8:45, moving forward into the U.S. session and members that will move potentially the U.S. markets. Clarida at 11:45. So what's significant about 11:45? There's two things you want to remember about any event that's on the calendar. Are they taking questions? Audience questions expected. That's going to matter. Versus just some speech. Oftentimes the speeches are released by the Federal Reserve, and you can find it on the Federal Reserve website. Sometimes the speeches are released before they're actually delivered. So if the text of the speech is already released, it's not as big a surprise. Okay, they're reading what they already prepared. But if there's audience questions, that's where we could see some interesting movement. Next is Harker, 3 p.m. And for those of you that like to trade the Aussie and even the 6A futures or the FXA ETF, we have the Reserve Bank of Australia on tap today. So pretty interesting morning we've got coming up. Let's see here. Where's my daily time frame? There we go. So, all right. So there's my daily time frame. Am I generally speaking bullish the Australian dollar? I am. Not only am I bullish the Australian dollar, one of the things to remember when you're playing currencies, and if you're a stock trader, you're going to like this too. How easy is it to play the futures of the stock market in Australia as a trader in the US? Not very, unless you take a look at the EWA. And if I'm in a currency of the country, I'm usually in the underlying stock market as well. So if I'm playing, for example, the Canadian dollar, I will very likely be also in or looking to trade the EWC, the Canadian MSCI iShares ETF. Love these country ETFs. Not all the country ETFs are liquid on the options chain, but many of them are inexpensive enough where a lot of traders will just play them outright. I don't typically do that because what's great about futures is what's great about options, the leverage. So if I can't get a liquid option in that ETF for that expiration, I'll look at other expiration dates. And I can also look at just other countries, right? If I can't find a country ETF that's liquid, all right, c'est la vie. If I can find a part of the option chain that has decent open interest and volume, terrific. If not, I just won't be able to play it. And oftentimes, if you see illiquidity in the options chain, you're going to have to go closer to expiration to be able to play that market, right? Not further out usually, but usually closer to expiration. All right. So, gosh, how's everyone doing this morning? How's everyone doing? You guys doing all right? Pretty good weekend? All right, we'll just keep plugging away. Okay, so monetary policy meeting minutes, 8:30 p.m. And that kind of takes us through Monday on the economic calendar. Now, I will say, be aware of the economic calendar on tradingeconomics.com as well, because sometimes you'll notice that economic events left off, especially Fed member speak. Lagarde, ECB Lane, there's your Powell speech. Williams, okay, see, for example, Williams was not listed on the Forex Factory calendar. All right, then we've got Clarida. Bostic was not mentioned on the Forex Factory calendar. Harker was. So do you see when it comes to the Fed members, they'll mention some. I don't know why they pick and choose what Fed members are going to list on the Forex Factory calendar, but the main reason to have this Trading Economics one as a second site to refer to is because of just sort of the holes in the Fed calendar that Forex Factory just sometimes will have. All right, so that just makes, what, 6? Whew. All right. Well, luckily, Powell already went. So I'm not surprised if we see a little bit of weakness post-Powell. We don't have another one until 11:45, so that leaves us enough of a window in the morning to day trade. So when I jump on over to the Simpler Futures room to take a look at what I might be willing to trade in the window that I have to trade it within, I know it's going to be a 9:30 to an 11:45 window, which, by the way, it is anyways for me. I'm not looking at, so let me talk a little bit about the schedule in terms of how I like to schedule the day. So here we are, 9 9:15 a.m. And I'm going to work on my morning notes. Most of my morning notes are going to be geared to, are we opening with a gap? Clearly, you can see that's the case, but are we opening with a gap that we know is above the 4 p.m. close? We got that part. But I think what's really important is not just a gap above the 4 p.m. close, which is what most traders stop their gap conversation at. In other words, they're looking at whether or not the 4 to 9:30 window has a space in it, right? Has a gap in it. But what I think is more important is whether or not we're trading higher than the previous session's high. That, to me, is that dual confirmation gap that we talk about here in this room, and we do not have that today. So my expectation for gap psychology in the S&P is a little bit lower because of that. Make sense? All right. So a great weekend. I love it. I love it. Awesome. Hey there. Besides the initial claims, hey there, Stevie B. What other events will I do? First come, first serve. Crude oil inventories. I'll look for the fade. First come, first serve is a fade, right? You know that it's a fade, meaning for those of you that are unfamiliar with the terminology, what does that mean? So first come, first serve fades. Aside from my love of alliteration, clearly, what am I looking for? Let's see if I've got something that we could fade. I mean, not today. So what could it be? Other than initial claims, golly, more Fed speak later on this week. Natural gas would be fine. Yeah, so not a lot, but so initial claims, right? So that would be the only one this week, and crude oil inventories. Those are every single week. So how does that work? Crude oil inventories and initial claims, CVB, are probably my favorite too. But really, any event, any singular event that is not a speech. So when I say singular event, I'm just talking about a data dump, right? We're not talking about Fed speeches, which can go on and on and on and on. We're not talking about an interview or anything like that. Non-farm payroll would not be one. Non-farm payroll has about a 5 to 15 minute, I'd say 15-minute digestion period because the actual report is enormous. Earnings oftentimes can have a first come, first serve reaction. But remember, a lot of times earnings are then going to be followed up with a conference call. So that's where that's an issue. So it's got to be something where it's a data dump and then that is it. That's why I like initial claims. We get the number. It's on a huge report. Done. Crude oil inventories. Yeah, there's a lot of pieces to crude oil inventories, distillates and gas, etc. But it's pretty much a data dump. It's a headline number, and then that is it. So it's got to be that kind of event, Stevie B. It's got to be that kind of event. So what that means for those of you that are curious is I would go to a 1-minute time frame, and I would be ready at just maybe 5-15 minutes before the event, before that data dump. And I want to be aware, and I haven't turned on my Thinkorswim platform yet, but maybe we'll look at it tomorrow. So what I'll do on my Thinkorswim platform, where I have my automated, so I have my algorithm, I have this creation of mine called the hourly price movement range that'll run on my Thinkorswim. And that was, again, for those of you that don't know what the hourly price movement range is, huge kudos to Auto Chartist. Again, something that I wasn't even able to do until they released this historical data. And then I was able to plug it through a very, very, very simple arithmetic calculation. But yeah, I'll fade that hourly price movement range. And the data, by the way, comes from this. That's what it's rooted in. I used to do it in Forex first. So of course. So right now it's those two events pretty much only. All right. So for those of you that are joining me for the first time, welcome to my office. And I will see you all. Yeah, it's kind of like hello, goodbye. I will see you all tomorrow at 9. Okay. So So just a few things the calendar's got me looking at: crude because of OPEC. We can take a look at those ETFs. And then as I go through the morning, we do not have that gap psychology unless we're trading higher than not only the close, but the high of Friday's session, okay, which I'm not seeing. So, check each index individually to see if that criteria is met. And then I'm going to actually today probably do a lot more scanning on the ETFs to find out where my relative outperformance is still at. It's been huge in two. So there's two ETFs you're going to track. And remember, for those of you that are interested in ETFs, mark on your calendar the 28th of this month. And I'm going to be doing a free webinar on the way that we build watch lists using ETFs, understanding relative performance, why sector analysis is always going to be relevant in this environment where 25% of market volume is still coming from ETFs, and the influence ETFs have on stocks and the influence stocks have on ETFs, especially right now during earnings season. So very interesting relationship that can open the market up, and you can see what may have been invisible before, this connective thread, and you'll understand, oh, that's why this is behaving, why it's behaving. What have been my relative outperformance? If you want to jot them down, they continue to be IYT, the transports, and I'm running over here a little bit, IYT, the transports, and SMH, semiconductors. And for those of you that are members of Simpler, I know there's quite a few of you here, you guys remember, I guess 3 weeks ago now, we set up a trade in Taiwan Semiconductor, TSM. And if you watch that video, one of the things I mentioned, and maybe I'll take that video now that it's older and I'll post it here on my channel so you guys can see the process. I've been long SMH. So go back to basically the beginning of October and take a look at the SMH. And then what I'll be able to do, we're going to talk a lot more about on the 28th of October is, well, how did you know the SMH? How did you know which stocks within the SMH? How did you know the direction? And here's what's really cool. What option strategy did you use? And I don't know if you guys can see it. Oh yeah, maybe you can a little bit. We're working up the next class. So maybe you guys can see it behind me. And we're working up the next class. And there's really 3 option strategies, 3 bullish and 3 bearish. I look at it as 3. It's 6 in total, but it's the same 3, but the bullish and bearish versions that I use. That's it. And the idea is to use momentum and trend to time your entries using some unorthodox approaches with volatility, not implied volatility, but historical volatility, to better determine the spreads, and which is something that a lot of traders say, well, how wide should a spread be? I love vertical spreads. Think about it. Every single option strategy you'll ever use is a combination of long or short calls and puts and spreads. So you figure how wide the spread should be, not just following implied volatility, but also, and I'll talk about some of the issues with percentage IV and implied volatility, some of the things that can skew them and make them inaccurate, especially in the face of, if we had prior in the year, a lot of volatility, how those numbers can be almost like a sweater that got stretched out. You ever have a sweater get stretched out? You ever try to put it back to the way it was? Implied volatility, believe it or not, can act like that sweater. So we juxtapose or even combine historical volatility and implied volatility to determine the width of the spreads. And then the momentum that you're using, gang, the momentum, what momentum are you using to build your option strategy? Is it a wide ranging day? Is it a narrow ranging day? Is it bullish momentum, bearish? When you look granularly at the kind of behavior that you're trying to capitalize on, you'll find out where and why the wheels might be falling off the wagon. Okay, so let me get going. I'm going to go ahead on over to the futures room. You guys have a great one. All right, I'll see you tomorrow morning. Usually I try to end at 9:20 so we can head on over to the rooms. Okay, so I'll do a better job of that tomorrow. Be good to each other, gang. I'll see you tomorrow.